Okay, great. First off, I'd like to thank the Red Cloud Group for getting everything set up on this. It's our first time here, so it's a chance to meet some new people and go through things. Kind of a interesting day to be making a presentation like this, an interesting week on this. But I think when the dust settles and the masks come off, maybe there's a good chance to look at this as a time to be looking for good opportunities. There's the fundamental value in many of these copper and gold projects is there. And things are probably going to get hit pretty hard or are already being hit pretty hard on this. So it's a great time to be looking for good projects, spotting projects that'll be coming back up out of this. It may take a little time, but they will be back. So in the brief time we have today, what I'd like to do is introduce Regulus Resources and particularly our Antiquary copper gold project in northern Peru. Antiquary is an emerging large resource that's in effectively a brownfield situation, so it's a project that has a good chance to become a new mine in Peru in the not too distant future. So we'll take a high level look at it today and welcome any questions in the time we have left, or you can seek us out during the rest of the day. We are publicly listed here in the TSXV as well as in Peru, so the appropriate cautionary statements apply. What we're going to look at is the copper project, and we're going to look at what our strategy as a group is, and who our partners, who our shareholders are on this project. As I mentioned, the Regulus story is really about Antiquary. Antiquary is a flagship project. It's the main focus on it. It's a Tier 1 asset in the making. By Tier 1, it means it's a project that has the potential to be large, so it can produce a lot of metal for a long period of time at a very good profit. These are the type projects that the major mining companies are looking for. As a copper asset, it's one that's clearly on the map for major copper groups. But with the gold component we have in this project, it's one that's increasingly of interest to gold companies. You're probably all aware of what Mark Bristow at Barrick's been telegraphing, but it's a consistent message we hear from all the gold companies. Increasingly, they wouldn't mind a little exposure to copper, and this presents an excellent opportunity for groups like that. The project's located in northern Peru. We're in a stretch of the Andes that's extremely well endowed. There are some very large mines like Yanacocha, the largest gold mine in South America, as well as Antamina, a number of other big porphyries that are not yet developed. Our principal base of operations is in the city of Cajamarca, and the project's located about 2.5 hours to the north on a mostly paved road. The reason this road is paved is because halfway out we drive right through the Yanacocha mine complex, and then we're located immediately adjacent to two operating mines, the Tantahuatay mine, which is operated by Buenaventura in partnership with Southern Copper, which is Grupo Mexico's Peruvian sub, and the Cerro Corona mine next door, which is operated by Goldfields. When I say immediately adjacent to mines, I mean this literally. If we look more closely at this, the ground that we own 100% of the red claims, and we have an option to acquire up to 70% interest in the pink block. We're immediately to the north of the Tantahuatay mine complex, and we're 6 kilometers from Cerro Corona mine. Tantahuatay is an oxide heap leach project. So they're mining the oxide cap over a very large copper gold sulfide at depth. They heap leach the oxide cap to produce gold and silver, but they have an opportunity to make a transition in the relatively near future to change this into a large copper gold sulfide plant operation. That same copper gold sulfide mineralization that exists beneath their operations on our south side extends onto our ground. So effectively what we're drilling out is a portion of a large copper gold project with a logical operator already next door operating. So it's easy to imagine a transition from this project into a much larger copper gold sulfide. This mine runs out of oxide ore in 2025, so that transition is relatively near in the future. The opportunity is there. The last thing you want to do is close a mine and try to restart it. It's much easier to just make the transition into a new mine. Goldfields, which is 6 kilometers away, has a mill, you can see their open pit, a mill, and a tailings operation. So different style, they produce copper gold from this. They also have a similar timeline in that in 2025 they run out of tailings space. They begin to backfill their pit. They extend the mine life to 2030 by processing low-grade stockpile. But effectively in 2025, this mine changes from one of their most profitable mines worldwide to one that's winding down. So one of the things we like about this district and our position is we have a pretty integral or pretty key piece of an emerging very large deposit that has a natural operator, our operating group next door, that's kind of the natural group to acquire our position to move forward. And we have another interested party that would like to play in the game on this. This just summarizes much of what I just said, that Tantawatai runs out of oxides in 2025 and need to make that transition to sulfides. Cerro Corona begins to wind down in 2025, is closed by 2030. We're in the process of drilling out our resource to position ourselves to have the best part of the district we can to improve our position in the overall opportunity. So the resource this is a resource we put out exactly a year ago, just before PDAC last year. It was based on our first phase of drilling. When we acquired the project, there was 17,000 meters of drilling on the project. We completed our phase 1 for 23,000 meters. With this 40,000 meters, we put out this resource. And we're about 2/3 of our way through the phase 2 program, which will lead to an updated resource towards the end of this year. So we consider this to be an interim resource. It's the first snapshot. It's very much wide open for growth in the future. Break it out as indicated and inferred. If we look at the total here, it's a little over 500 million tons at about a 0.7 copper equivalent grade, notably better grade than many large bulk mineable copper deposits, with a very strong gold component to it. So of this mineralization, about 1/3 of the value is in the gold. If we look at it, it's straight up, it's 4.5 million ounces of gold alone in the project. That's only about 1/3 of the value. It's about 5 billion pounds of copper, or 8 billion pounds of copper equivalent. Down below, we see this is our resource, broken into indicated and inferred. This is the most recently published resource for the neighbors next door in sulfides. This is not their oxides, this is their sulfides underneath. So about 18 billion pounds. So combined in the total district or the total deposit, we're already looking at 26 billion pounds of copper equivalent. Very, very large project and very much wide open for expansion. As we look in more detail, remember the red claims are ours. We own 100% of those. The pink claims we can own 70%. We acquired this project by identifying a junior company in 2014 that had patiently assembled these claims. These are old mining claims. They were in very complicated land tenure situation. The major mining companies working around it weren't able to acquire them. The joint venture here, or Buenaventura up here, or Goldfields in this direction. And a lawyer by the name of Fernando Pickman patiently assembled these together, put them together in a public company, ran out of cash, was not able to move it forward. We had, this is our second company. Our first company, we drilled out a nice deposit in southern Peru and sold the first quantum, so we had cash, we had a track record, and we were able to acquire the project in that way. But we faced a challenge, and how could we knew there was mineralization on these claims. We had an operating mine right next door. How could we drill these out if they weren't even physically connected? So we had two important agreements that we completed. The first allows us to earn 70% in this by completing 7,500 meters of drilling. We've got about 2,000 done. We should hit that milestone about mid-year. And the second agreement is a more important agreement in that in a more unusual agreement, is that we made an area of interest that includes our red claims in a 500-meter layback onto the mine ground next door. And within that, we share all data. This is best described as a collaborative exploration agreement. We share all data. We see what they drill out. We can't report what they have, but we can use it to constrain our resource. And the key thing for us is it allows us to model a large open pit and more properly report all the mineralization on our ground. So the resource we just looked at, that 500 million tons, is only on the red claims inside this pit. As you can see there, it doesn't take much imagination to think that there must be a lot of mineralization on the neighbor's ground. There is. We can't tell you those numbers. But we have a big piece of an even bigger deposit right now. If we look at a cross-section along this white line looking to the north, we can see two things. We can see how we have to report. We can't show the mineralization not on our ground. But this section is a good one to illustrate that not only is there very low strip on this deposit, but much of the mineralization is quite high grade near the surface. These zones are plus 1% copper equivalent, very near the surface. So low strip, immediate access to higher grade mineralization. That's important because if we go back and take a look on this, it's important to note that the mineralization, almost all of the mineralization on the neighbor's ground, and about 40% of the mineralization on our ground is what's called high sulfidation epithermal mineralization. Very good copper gold grades, but elevated arsenic content. And so that elevated arsenic content, you can see here, means that the mineralization will require additional either treatment or additional penalties paid to smelt that. So it's very nice that we have the higher grade, we have a lot of it, and we have it very close to the surface. However, about 54% of the mineralization that we have on the project is lower arsenic, which is much more attractive. So as we begin to drill out our side of the project and compare it to the neighbor side, we believe that we're developing a good case that a logical starting point on this project would be on our ground with lower arsenic contents, more access to higher grade immediately. So it places our mineralization up front in the overall deposit. Another way to take a look, this is the top 20 drill intercepts for big copper opportunities worldwide that have been published in the last 2 years. They're ordered by a grade thickness parameter, so it's interval length by a copper equivalent % grade on this. To make this chart, you have to have long intervals of very high grade. We have 5 of the top 20 in the last 2 years. The only group that's consistently beating us is Sol Gold on their Cascabel project in Ecuador, which many of you would know about. However, if we look at the from interval on this, many of their intercepts are starting at 800, 1,000, 700 meters, where many of ours are starting much closer to the surface. We're bulk mineable open pit geometry on this. They're bulk mineable underground geometry on their project. 3 of these 5 intercepts were not used in our last resource. 2 have been drilled since we did the last resource, and 1 at the time we calculated the resource was by itself with no support for the other holes around it. So the new drilling is adding mineralization to the north. A quick look at how the deposit sits. We're looking to the northwest on it, so think about it as more ground this way on ours, more mine ground this way. The high arsenic is restricted to this wedge of Miocene volcanics on the upper part of the diagram. These 2 units in blue and goldish brown are calcareous sedimentary units. This is where the skarn mineralization develops. So this is high arsenic material. This has potential for low arsenic material. And it's important to note as you move to our ground to the north, we get away from the high arsenic and the lower arsenic material comes to the surface. So another way to take a look at the same information, this just is a copper arsenic ratio, and we can see the yellow and reddish colors represent the high arsenic. The purple colors represent the low arsenic. This area is undrilled, but we have very good reason to believe that there's going to be additional mineralization as we move into the north. This is the data set that really caught our eye when we decided to acquire this project. This is magnetic information that gives us an idea of how magnetic the ground is in the area. And as geologists in this geologic terrain, when we see a central magnetic low surrounded by an annular magnetic high, this is a classic signature of a porphyry center producing a skarn around the outer margins. Keep in mind, much of the high arsenic mineralization to our southwest is associated with those younger Miocene volcanics. So when we get out from underneath these, we see this signature. It really perks us up in terms of looking for a skarn on this. To date, we've only drilled the southwest quarter of this. We've put out a pretty nice resource, but we're very interested in drilling these targets to the north, particularly these strong magnetic highs and the central magnetic low. We've just received our permit to be able to do that, and drilling will commence in April to test these areas with very good potential that will increase the size of the deposit and will increase it towards cleaner mineralization. So just to summarize that, we have the resource that's beneath the mine to the south. Their last number that was published was about 900 million tons of 0.8 copper. Our Antiquary sector of the deposit is where we put out our number of a little over 500 million tons of pretty good grade. And what we're anxious to do is to move into this Antinorte project to the north. You can see some of the phase 2 drill holes. All of these holes were not drilled when we did our last resource. The resource we report is inside this pit in the golden colored areas that's on our ground. This mineralization that hangs out the bottom is classified as inferred resource, but it's not in the pit. However, by drilling to the north, the reason this is not in the pit is because it had to treat all of this as waste. We now demonstrate this as mineralized material. We'll push this wall to the north and significantly expand the deposit. So the catalysts for 2020 are we'll continue to drill. We're starting that extension drilling again this week, and we'll be drilling on the new Antinorte projects in April. We've begun extensive metallurgical test work to work out how we treat this arsenic, how we move forward on it. As I mentioned, the first time we'll be testing these new Antinorte targets to the north, and that will lead to a resource update. So our strategy overall is to continue to grow the size of the deposit, to continue to de-risk the deposit, and make a case that as a combined deposit, a combined district on this, that our ground is integral to the upfront portion of a much larger copper-gold sulfide. Whether the neighbors make a determination that it's wise for them to buy us and incorporate it into their project, or whether another group acquires us. Our business is to find these, dimension them, de-risk them, and then ideally monetize those by selling them to an interested party. Selling it to a different party than the JV next door might not necessarily be a bad result for the JV next door. They might be encouraged to have a group that comes in and acts as a partner and brings some capital. This is an opportunity for a very large mine, one that would require quite a bit of capital to develop, so they might like to have another party to come in. And that's where we're kind of interested in talking to, particularly a lot of the gold companies right now, because it would give them a way to have a piece of a long life copper gold asset moving forward. Just a few words on the strategy. As I mentioned, this is our second company. Our first company was called Antares Minerals. Using the same strategy of acquiring a resource with overlooked potential, preferably at low cost. Today is a good day to go out and shop for things, look for a wounded peer that needs some help on something. Add value by expanding the resource and de-risking, then ideally monetize it by selling it to a major company. The reason we do that is there's a lot of value added in this discovery phase. But the time from a pre-feasibility study to developing a mine when you add value again is a long period of time and fairly risky for a single asset. So we prefer to monetize these more quickly. With Antares, we acquired the Hikira deposit for $15 million, did our work on this and sold it for $650. With Regulus, we acquired Southern Legacy and the Antiquary project by a merger, effectively about $4 million in paper to take the project over. We're well on our way to showing it, and our idea is to monetize this. And just a bit of a pitch for a third company that we've recently formed called Aldebaran Resources. We spun Aldebaran out to capture a really exciting copper gold porphyry in Argentina called the Altar project. That one's recently put into that, and that's the next story that's coming up from our group. This just shows a little bit of the return that we've had our shareholders. When there's no guaranteed pattern on this, but when we discovered Hikira, we ran up. Interestingly enough, we had a drop in 2008, 2009, came back out of that strong and sold the project in 2010. The story on this recently was we've got fish on again, just like we had here. It looks like today we might be repeating a little dip before we get to the end of the story. Just one last thing, we've got a pretty straightforward share count on this. We're reasonably well-financed to get through this year. And we have the benefit of one large shareholder, Route 1, a fund out of San Francisco that owns about 24% of the company and is kind of the cornerstone for us. Because of our previous success, it also allows us as management to have significant ownership in the project. So most of our shareholders are long-term shareholders that benefited from Antares. Thanks for your attention on this, and we'll be around all day if you have more questions.